Good evening.
Good
It's
evening, Mark.
Thursday. Good evening, Kawi. It's Thursday, September 8:47 p.m. Welcome to episode 54. More oil to the fire. This is the Mark UN Wawi show. This is Mark.
And Wawi Santos.
All right. Good evening to you guys. And for those who are listening, joining us, just a disclosure, this show is made for sharing information purposes only. I and Wawi are both physical therapists here in the USA with a passion and interest in investing our hard-earned money in the stock market. So basically, we run on a weekly basis, or at least we try to. But we take a closer look at the Wall Street market, the stock market, and its sentiments, and some guide, like guidance, or at least some latest news about the stock market. So we're gonna head on to our weekly sentiment survey review. So we're gonna start off with the American Association Institute of Investors to see whether they're bearish or bullish in terms of the stock market performance in the coming months. So, coming off of last week's low, what's interesting is the stock market investors are even more bearish right now, Wowie. From last week's 21.9, it went down even lower, but we're back down to the teens, 18.1%. I don't believe I wasn't thinking that this can happen again when we first thought that we had landed a bottom back in July. But here we are, we're back in the teens again in terms of bullishness, and more than half of the investors that were surveyed are thinking that the stock market would still further go down, 53.3%. What do you think, Wawi?
Yeah, and it's it's gonna be volatile for a while we're dealing with inflation. And everyone is like waiting for the Fed to say something, and I'm just thinking that if they do the 0.75% rate hike again, they're gonna react bearish again.
Right.
So, but the likelihood of that happening is very high.
And it's at September 20 and 21st, right? When they would be announcing the Fed rate hike.
Yes.
And it's within like 12 days from now. So that's one event that definitely is in the books of stock market investors. Things to watch out for. The higher the interest rates, the worse it is for businesses and investors to loan for money to invest. So that's what the Federal Reserve is trying to do. They're trying to slow down the economy, regardless, just to address the inflation. At one point, I think today, Bill Ackman, one of the famous, well-renowned investors, has said that the Federal Reserve should even jack up the rates, which we have videos right now here. We can roll the clip. It's just a 2 minute and a half long interview by CNBC. Let's roll the clip.
We are in this economy and the markets right now. We talked to you over the summer. You had talked about how you thought the Fed needed to raise interest rates. They are doing that.
Yes.
The market has been having in terms of equity, is a tough time as a result. What do you think happens this fall? What are you doing?
So we own the same companies we've owned really beginning in the year, absent a new investment that was very short dated in Netflix, because we think ultimately if you own great businesses, you can ride through a challenging time like this. Our biggest fear was inflation, and that's why I wanted the Fed to raise rates quickly and soon. They're now doing this.
And do you want them to continue?
I think they have to. I think what they've said they're going to do, they have to do, which is raise rates to something in order of 4% or maybe a little bit more, short rates, keep them there for a reasonably extended period of time, a year or so, and then hopefully inflation starts to come off. And you're seeing, I think, some indications that inflation is coming
If
up.
we had this conversation 12 months from now, what do you think is a realistic sense of what inflation could be in this country?
I think it's come down a lot. I think it's come down a lot.
What's the number to you?
It's 4%.
4%.
3.5%, hopefully.
And then
on its way down. On its way down.
And where are equities as a result of all this?
I think once people realize the Fed doesn't have to keep increasing rates and will soon be taking rates down, that's kind of a buy signal for markets. And so the question is how far in advance does the market predict that kind of outcome. I think if people see inflation come off 8.5, you start to see a pretty powerful continuing trend. Then I think people will expect at some point the Fed to ease. But they're not. What they're not going to do is take rates to 4% and see a good inflation print and then start taking interest rates down again. They're not going to make that mistake.
And final question for you. I'm actually curious what both you think. We're all here in person together now.
Yes.
It's post-Labor Day. School's starting. A lot of folks are going back to the office for, in some cases, the first time even. There's a massive debate raging in this country about whether that should be the case, will be the case, needs to be the case. What's going on in your world?
So I'll give you, so PTPA today doesn't have many employees, so it's not easy. I think that they're probably together, but the short story is Pershing. What we did is,
Well, I guess we'll cut it right there. So Wowie, I guess this guy Bill Ackman still thinks that there's more downside to go because the Federal Reserve has still more room to go in terms of hiking up rates.
Yeah, I agree. But something that needs to be done is, people should look at how much profiteering and price gouging is going on.
Mm-hmm.
If you look at the used car market, and the housing market, how much of that profiteering is going on that's driving the inflation much higher than expected.
Mm-hmm.
So I think there should be some regulatory scrutiny, for them to look into that.
Yeah.
Because I really think, some of the forces is not just purely market driven,
Mm-hmm.
but just taking advantage of the situation.
Yeah. And another renowned Wall Street fund manager, Scott Minerd, says, this was just published this afternoon, says that he sees the stocks falling another 20% by mid-October. He said since 1960s, price earning ratios have trended lower when inflation is higher. And we should see stocks fall another 20% by mid-October. If historical seasonals mean anything, according to the chief investment officer at Guggenheim Partners. So definitely a lot on the bearish camp here, Wowie. They're not they're not in the hiding anymore, but they're just out there saying that there's more downside that can occur between these recent coming weeks after the Federal Reserve comes out with their Fed rate hike.
Yeah, so just a little input here from, in my opinion, since there's a lot of new retail investors and it's driving a lot of the movements here.
Mm-hmm.
Like when they started the no fee trading, that attracted more retail investors back in 2019, I believe. That's when it started. Now the professional investors are taking advantage of these retail investors. If you look at recent options trading, there's a $1 billion increase since last year, in options trading. So these retail investors like us are not familiar with these option strategies except for the professional ones. So they're the ones that are, pushing this narrative, in my opinion, at this stage. They're taking advantage of the situation. So you should see a lot more leverage and options trading going on moving forward. So retail investors, basically, what I'm saying is retail investors should be more educated if they want to take advantage of these down cycles.
Definitely. It's hard to bet on the options market for sure. I've tried it before and lost $50 within 24 hours. And back then my portfolio was around $500, so I decided not to pursue any more trading using options. It's a tricky. I think it's high risk, high reward if you know what you're doing. If not, they're just gambling your money away, basically. So for the fear and greed index, we are back at fear. So not so long ago, we were just at neutral back in August 30th. And we were actually at greed between early August to mid August. We were at greed, but now we're back in the fear mode. Not seen since last week of July, since we I think we bottomed that point. So definitely the trend now is downwards in terms of the fear and greed. More people are going into the fear camp, being more bearish, as what our AAII survey had revealed. We're gonna take a look at some of the market breadth. So stock price breadth has climbed down, meaning that there are fewer, a little less people trading their stocks. I myself haven't traded for like maybe a couple of weeks now, 2 to 3 weeks now. How about you? Have you been engaging in any trading recently?
Yeah, so I had some trades recently. I just bought some shares of Bank of America and PayPal.
Hmm. Some financial exposure, financial industry exposure.
hmm And recently looking at Tractor Supply,
Mhm.
and I forgot what else I was looking at earlier. I mentioned in the group.
Some
Um,
industrials.
yeah, some industrials, definitely some industrials because of the um, it. Well, if you're looking at competition in the home renovation um, area, since people are going to be staying more longer in their homes and not selling until things are better,
Mm.
people are going to be renovating. So I remember, yeah, and I remember now I was looking at Trex.
Mhm.
Yeah, so they're both Tractor Supply and Trex are building distribution centers in Arkansas,
Uh-huh.
and they're trying to grow their distribution centers to supply the mid, area of the country.
Trying to expand their business, expand their stores.
hmm Yes, yes.
Hmm. Something to look at for sure, or at least keep track or add to our watch list there.
hmm
Next one would be the options market, put and call options. So the higher this graph goes, the more bearish the market or the people are in terms of their market view. Buying put means that you're guarding against any downside. So put call options are now at extreme fear. So we are now back at extreme fear for the past, at least since the start of September. So those who are not aware, September usually is the worst month among all the months in the year, according to some study. So people are getting more bearish and trying to buy more protection for their portfolio, definitely. So we're gonna jump on onto our industry performance for the past week. Healthcare is the best performing sector, followed by utilities, then financials, and then consumer cyclical and real estate. The worst performing sector is none other than energy, followed by technology, of course. So technology has been the worst ever performing sector, well, second worst since the start of the year, followed right after communication services. So a little bit more on the, I guess, for the past week, people are definitely more bearish, and it reflects on the performance of the industry. Healthcare for sure will be around despite the recession.
So people are moving to the recession resistant type of stocks and companies.
Yes.
And since technology is sensitive to uh, interest rate,
Mhm.
uh, it's suffering more than the other sectors.
Mhm. And what's interesting though, Wowie, despite the more bearishness that people are feeling, moving their money here and there, hiding in healthcare industry, the stock market, the S&P 500, is up 1.76% for the past 5 days.
hmm
So definitely most or majority of the people who have bet the stock market would go down since last week are now on the losing end because the stock market even went higher. So I'm not saying that this could be the floor, but that's definitely an outstanding reversal. Like the Nasdaq, which has the biggest tech companies, which is the one of the biggest losers since the start of the year. It's also up 1.32% for the past 5 days, up 1.32%. So quite an interesting counter moves here. The volatility index, which tracks the erratic movements of the S&P, is actually down 11.64% since the past 5 days, along with the VXN, which tracks the volatility in the Nasdaq. Volatility in the Nasdaq is down 7.41%. So it's been climbing smoothly in an uptrend, but yeah, we're not to discount any financial expert tips, as we already have discussed by the likes of the Guggenheim and Pershing Square investment officers. So
Yeah.
yeah, go ahead.
Yeah, it's still gonna be uncertain how the sentiments will react when the Fed Reserve raises their interest rates again. So it's a global. Um, the effect is global. The U.S. markets affect global markets as well. Energy is the main sector that's in a crisis right now because we're affected by what happened in the Russia-Ukraine war, and now prices of oil may be going down, but OPEC is also cutting down production. So, and Europe is gonna go into the winter. So I'm still uncertain about, I'm still somewhat in the middle here, just waiting.
I think it's better to be on the safe side and not plowing into the stock market, trying to time the market. If you have a plan to dollar cost average, I think it's fine to continue with that type of plan.
Yeah, and definitely a longer term horizon, being more long on your holdings would be a good mindset to follow at this point.
Yeah, sticking with your highest conviction stocks. If you have done your research, I think there's nothing to worry about if you see your stock or company share price plummeting down 20%. It would just make you buy more if you really believe in that company.
Yes,
Yeah,
I agree.
In contrary, Goldman came out with a report a couple of days ago that the US is on track for a soft landing, according to Goldman Sachs chief economist. So all the while that most of the big money, the smart money, are predicting a market collapse, basically 20% down. That's just incredible sell-off on these companies. I mean, on the stock market. At least Goldman Sachs, one of the big Wall Street banks, is saying that for the most part, that the stock market would remain range bound. What do you think, Bobby?
Well, commodity prices are going down, so that's good for the market, and that's a bullish signal, and I think that's what they're looking at in that article.
Right, and now that you've mentioned that commodity is down, oil, as we have discussed last week, which hasn't suffered worse performance since years ago, it had broken through the 85 level mark as of September 7th. So we haven't had seen less than $85 a share, a barrel, since, let me see, since February of this year. So if if oil, more likely as well, plays a role in inflation, then this drop, look at this, from June 10th, $120 a barrel, is now down to $83 a barrel. So this is quite a huge drop for commodities, oil itself. So might as well that explains the drop in oil or energy sector in the stock market.
So if they cut production again, we'll see probably a reversal of that downtrend on, Brent crude.
Yeah, and right now I think most of the European countries have been able to stockpile and improve or at least even add a lot more of their functional oil capacity, despite Russia halting immediately like all of their oil exports through the Nord Stream pipeline.
Yeah, definitely the countries in Europe that their oil structure are the worst right now when it comes to this
Yeah.
that's affecting their high cost of heat.
Yeah. I think the newly
Yeah, and
installed UK Prime Minister as well. I think she's gonna implement a cap on energy prices, up to at least 3,500 euros or 2,500 euros.
that would be like a band-aid for the situation at this moment. Reliant on gonna source their heating energy for the winter. And that would probably, some of that probably would come from the United States.
More likely, yes. It can be exported from here. Who knows? They might also order some from China or from India.
Yeah, well, yeah, China and India will profit from that because they're buying cheap Russian oil and gas right now.
Yes, it's like the ultimate arbitrage.
Yes. Yeah. So the market has a way of finding, liquidity somewhere.
True.
So if there's a demand, it will go from black market to legal market.
Yeah, and with this Chinese slowing down its economy, it's gonna make sure that it be able to profit at any point in time, just to increase their cash buffer and hire more people and improve their economy as a result.
Mm-hmm.
Alrighty, I guess I guess we're gonna end up our episode on this point. Do you have any quote for the week for our listeners before we end?
No, I just want to tell our group members to watch out for my messages on the Facebook Messenger group, because we'll be talking about typical biases when it comes to behavioral finance.
Yeah.
So we'll talk about behavioral finance in our group.
Yep.
So stick along with the group.
That's surely anticipated, Wawi, because part of investing is not just about looking at the numbers, but also knowing the market psychology and the investor psyche as well. So that way you could stay seated at least and buckle up during the tumultuous times, up and down times in the market. Well, again, Wawi, thank you so much for your time this evening. And listeners, that does it for this episode of Mark Yu and Wawi Show. If you have any questions, send it over at markyuwawishow@gmail.com. Remember, build that emergency savings and invest the rest for an abundant retirement. Once again, this is Mark Yu signing out.
And thank you, Mark. This is Wawi Santos signing out.